At Colliers, what we've done is we've done a global investment sentiment survey in the last couple of months, and the answers from that are quite positive looking forward over the next 1 to 5 years. Clearly, we've been through a rather uncertain time. I think with regard to Europe, there's no doubt there are winners and losers at the moment. Our survey shows that clearly Germany is still strong. Other parts of Europe are still under a lot of pressure. With regard to London, it is undoubtedly, together with New York, the global focus for a lot of investors who want to have a representation for commercial property investment on a global stage. They see London and they see New York as probably the two cities that they like most at the moment. In Europe, there's no doubt that Paris has been the second most attractive city, but just now with the slight uncertainty in France and the economy, it's almost making London more attractive again. Link that to the federal cities of Germany, and you do have probably the two strongest investment markets. For London specifically, what we're seeing is rental growth. In the West End, we can see rental growth for offices coming through. It's clearly coming through for prime retail already. In the city, probably rental growth will come through a little more slowly, but we hope in 2013-14 there's going to be more confidence from office occupiers. So the take-up of offices in the city and Midtown will improve as well. And the good thing about that is it means that we can see rental growth through West End, Midtown and into the city. That will attract investors. I think the other part about the investment side we're finding at Colliers is that the sovereign wealth funds and the major international funds are still seeking the best assets in London. They're looking at the larger assets over 50 million. At the same time, what we're finding is that the UK and domestic funds are probably beginning to look at like a ripple effect. They're looking outside the core central London because they're looking for higher returns, maybe in the donut around the core CBD of London and then out into the regional cities and to the Thames Valley. But we are more optimistic, more confident that 2013 will begin to see a little bit more rental growth, and I think we'll continue to see the desire for investors to have prime assets, offices and retail, particularly in London of course, and also in the regional cities.